So we'll make a start today. So we have a pretty packed agenda. So we'll get going with today's session. Just a reminder, we will be recording this webinar today, and it will be made available after the session. So just a quick intro. So thanks for joining us today for this CitySwitch campaign focused on mandatory climate reporting, Australian sustainability reporting standards. For those of you who don't know me, my name is Ivan Jones, the National Coordinator of the CitySwitch programme here at the City of Sydney. This first webinar and a three-part series will provide you with an introduction to the new legislation and how it might affect your business and stakeholders. The second and third webinars will dive deeper into the legislation, including data collection and reporting and navigating the disclosure process. We'll also provide registration information for the next two webinars later on in this session. If you have any questions during the session, feel free to drop them into the Q&A box, and we'll have some time at the end of the session to run through these questions. Next slide, please, Abby. So before we start today, I'd like to acknowledge the traditional owners of the lands I'm joining you from today, the Gadigal of the Eora Nation, and all traditional owners of the lands that you're joining us from today. I pay my respects to their elders past, present, and emerging, and to any Aboriginal and Torres Strait Islander peoples on this call today. Next slide, please, Abby. So a quick introduction to CitySwitch for those of you that aren't familiar with the programme. So CitySwitch is a free national programme led by local government with a focus on supporting businesses in the commercial office sector to work towards net zero. The programme is free to join and is designed to simplify and structure the journey towards net zero, understand best practice and provide an opportunity to build collective knowledge, to connect businesses along the way as well, and to have a programme to be accountable on tracking your progress towards net zero. Next slide, please, Abby. So the programme currently has 179 members across the country, and that's equivalent to around 672 tenancies nationally. The programme is coordinated by the City of Sydney, and we're also joined by the City of Melbourne, North Sydney, Yarra, Ballarat, and Port Phillip as council partners. We have dedicated programme managers in each council partner to provide guidance for local businesses on their journey towards net zero. We also had a dedicated national programme manager to help businesses not represented by a council partner. We also work closely with Neighbours, a benchmarking rating tool, and the Department of Climate Change, Energy, Environment and Water of the federal government. If you would be interested in learning more about the CitySwitch programme, if you're not a member yet, please feel free to reach out directly to me after this session. Next slide, please, Abby. So throughout each financial year, the programme delivers 3 educational campaigns to our members across the net zero pathway. We work with external consultants such as Rewild to shape up educational resources, toolkits, in-person workshops and networking events. Members can also track their progress towards net zero through our annual reporting period, and all of this is free for our members. Since 2022, the programme has delivered around half of the sub-actions throughout our net zero pathway, including measuring your baseline emissions, renewables, greening your supply chain, and most recently, reducing travel emissions. Past resources for these campaigns are free for our members and included on our website. As previously mentioned, our most recent campaign will focus on mandatory climate reporting, as we recognise that this is a big topic and that's in high demand for our members. So I will now hand over to our campaign partner, Rewild Agency, to kick off this webinar series. So today we're thrilled to be joined by Abby Freestone and Sophie Hutchinson, who are both directors at Rewild. Abby, over to you.
Great, thank you, Ivan, and hi everyone. Thank you for joining us on your Wednesday lunchtime. We are really thrilled to be running this session and collaborating with the CitySwitch team on bringing this mandatory climate reporting campaign to life. It's certainly a topic that's very close to our hearts and something that we're busy helping lots of organisations to navigate at the moment, and appreciate it is a little bit of a black box, the area of climate reporting. So we will, in these webinars, be getting a bit under the hood, sharing lots of our insights and, trying to help you all make sense of it all in a much clearer way. So to begin with, just to introduce myself and Sophie, we are directors at Rewild Agency, which is a Melbourne-based sustainability consultancy. We work a lot in the construction centre. We've got a sustainable design side of the business. And then we also do lots of corporate ESG and climate-specific advisory. So lots of climate risk and resilience work, lots of reporting work, and what we're most passionate about too is the decarbonisation side of things and setting credible targets as well. So we work a lot, as I said, in construction, but other sectors as well, such as hospitality and tourism, government, education, agriculture. So yeah, a real mix of businesses, which constantly keeps us on our toes. Today's agenda, we are going through an introduction to climate reporting. So this is really unpacking the basics and fundamentals of what climate reporting is, and in particular, what the Australian Sustainability Reporting Standards are. At the end, we'll also chat a little bit about best practice upskilling, project management, and resourcing, because that's a key thing to discuss early on in the process as any organisation is starting to navigate this. But certainly this session is very much an introductory overview to climate reporting. So if you are already well versed in climate reporting, hopefully you'll still be able to derive value from this session, but we do encourage you to come along to the other webinars where we'll dive into more detail, and I'll chat about those in a moment. But to begin with, I also did want to share a bit more info about this campaign, and just to make sure that everyone's clear that the campaign is really trying to help upskill, shed light on a lot of these concepts and build knowledge and capacity among CitySwitch members and anyone else who joins these webinars. But the outcome of these webinars and the tools that go alongside the campaign is not to necessarily help you meet your compliance and your regulatory obligations. We are not qualified to give financial or legal risk or advice. So these are designed to be informative sessions, but just to keep that in mind as you're absorbing all of the information. And really, it's critical to be discussing this topic because there's around 6,000 businesses in Australia that are going to be impacted by this over the next 3 years. And that figure sort of varies slightly depending on who you ask, but roughly it's a huge volume of organisations, and many are already underway and well versed and well prepared, but many are not, and they're still early on in the journey. So there's lots to discuss. So we do have 2 more webinars in the series. So it's amazing. We had an excellent turnout for this session. We've actually had around 350 people RSVP for today's session. However, there's 2 more sessions to go, and they are really not to be missed. They're really just diving into some amazing practical topics, and we'll be hearing from some amazing guest speakers as well in those sessions. So we will put the links in the chat shortly to be able to go and register for those. And there's a QR code at the end as well where you can actually scan and register for next week's webinar. But alongside the webinars, we're also developing an educational guide, which is basically an ASRS toolkit of sorts, which pulls together all of the great information that we've got to get for you in these webinars in one central place, and is a really helpful resource. And also then a data collection tool to assist CitySwitch members to report on their emissions in a very similar format to what the mandatory reporting format would be, just for the scope 1, 2, and 3 emissions component. So those tools, importantly, are only available for CitySwitch members. So if you have been thinking about joining the CitySwitch program and looking for a sign or inspiration to do so, now would be the time, because then you'll be able to get access to those great tools. And as Yvonne said, it's a free program, and we couldn't speak highly of it ourselves. So encourage you to sign up and become a member. Webinar 2 and 3 guest speakers, we did just want to give a big shout out to some amazing folks that will be joining us. So we'll have Bank Australia, Climate Zero and YMCA Victoria joining us next week. And then Reground, New Forests and KPMG will joining us the following week. So we wanted to make sure there's a range of different sorts of businesses that are CitySwitch members. There's lots of smaller SMEs, but also some really large organisations that are already captured by the mandatory reporting. So we wanted to have a range of different perspectives from those sorts of organisations as well. So we think it'll be a really good discussion and hope to see you all in those webinars. To begin with, we wanted to kick off with a poll. So please do whip out your phone, scan this QR code, or you can head to menti.com and add in the code. The code there is 32520713. We just have 2 really quick poll questions to get a gauge on how confident you all are currently with all things mandatory climate reporting. And then also understand which topics you're interested in learning more about. So I'm going to just click start on the first one. It would be great if you can just rate your current level of understanding on the topic of climate reporting. Yeah, interesting sort of split between low and medium there. Couple of you over on the right-hand side, that's great. Definitely encourage you to come along to webinars 2 and 3 if you're on the right-hand side, because that's will be more of the nitty-gritty practical stuff. But yeah, amazing to see a good split between the low and medium, and anyone who's on the left side of the scale there, you're in the right spot today, because this is where we'll be unpacking all the key bits. And seeing a few more come through. Great. Thanks, everyone. I might keep moving on to the next poll. For this one, we were eager to understand which topics you're wanting to learn more about in relation to climate reporting. There are many, and all of the ones listed here we are covering in some shape or form in this webinar and the subsequent webinars, and in the resources that are being developed alongside the campaign. Again, a bit of a mix. It's interesting. I thought something like assurance might actually rank higher, but perhaps that's not the sexiest topic, but certainly an important one if you haven't gone through that before. And lots on the actual report compilation and lodgement. So that is what we'll cover in webinar 3. So if you're interested in that, I encourage you to make sure that you're at webinar 3. And pretty even, yeah, obviously data management is critical, and we'll be covering that a lot in next week's webinar, webinar number 2. Brilliant. Thank you so much, everyone. Just great to see where everyone's at and get a bit of a flavour for what everyone wants to make sure that we cover. So with that, I'm going to hand over to my wonderful co-director, Sophie Hutchinson, who's going to provide the introduction to climate reporting.
Perfect. Thank you so much, Abby. And yeah, this really is that kind of Climate 101 introduction. So hopefully, yeah, really speaking to those people with the low and medium knowledge here. So I'll be talking you through what is climate reporting. Fundamentally, it's the disclosure from a company of a company's climate-related, their risks, their opportunities, their performance. Generally, a company here will be disclosing on greenhouse gas emissions, climate-related goals and strategies. Sorry, Abby, we can see the screen there. Perfect. The risk management, the government processes, and the financial impacts of climate change. The objective of what we're looking at here is to improve quality, consistency, and comparability of climate-related financial disclosures. So what we'll be talking through is kind of the why, and the why for a lot of companies is the regulatory compliance, but also there's a lot of why that's a lot of benefits that come from it, for investor confidence that comes from this streamlined consistency and comparability of disclosures. It's also, we're seeing some really positive outcomes in terms of identifying further risk management opportunities and competitive advantage opportunities that allow for strategic decision making. Next slide, please. So here in Australia, you would have heard, hopefully by now, that mandatory reporting is mandatory, and it is mandatory in other jurisdictions too, such as New Zealand and Canada and in the EU. And that means there are some mandatory reporting standards that we'll talk to, but there's also some voluntary standards as well. And fundamentally, that makes for a very, very busy reporting space that's always typically identified by lots of acronyms. So there's just acronyms everywhere. So we're going to try and break those down for you, because fundamentally at the bottom of it all are the global guides and the global standards that really form the anchor point to a lot of this work. There's the UN Sustainable Development Goals, and we'll talk a lot about the Greenhouse Gas Protocol. From those, a lot of the reporting frameworks and standards have emerged from, and we will talk through the TCFD being one of them. And generally with those, they generally quite voluntary, but they also can be quite specific to different industries, as each one might cover a different industry in a different sector. And from those on top there, you'll see some climate-related regulations have popped out, and you can see in that the ASRS, the Australian version that we'll be talking to today. I guess the key point here is that some of the climate-related regulations may seem quite new, but actually they are based on frameworks and kind of guideline principles that have been around for quite a long time, although they have evolved. So talking of evolution, this is a bit of an evolution of the climate reporting space. A lot of it started with the TCFD, the Task Force for Climate-Related Financial Disclosure, which actually started back in 2015. So it has been around for nearly 10 years. And that was kind of one of the first bodies that set up the recommendations of how climate reporting should go about, and the 4 key areas that are governance, strategy, risk management, and the metrics and targets. So this framework, this was then adopted by the ISSB, the International Sustainability Standards Board, in 2021, and they were again tasked with setting up a consistent, comparable, and reliable sustainability-related information. Their scope was actually slightly bigger than the TCFD. They have incorporated sustainability-related financial disclosures and not just climate and climate alone. But here in Australia, that's what this kind of latest standard has been built upon. The Australian Accounting Standards Boards have adopted the ISSB's reports and guidelines, and have adopted that into a kind of slightly more Australian version. And that's what we've got here, and that's what we'll be talking through today. And that is in the form of the ASRS, which was adopted here in 2024. So this is climate reporting, and how does it link with financial reporting? What's been so good about financial reporting is it's really given the kind of reporting language and also the gravitas that's applied to financial reporting. It's a framework and a methodology for understanding climate change, and being able to translate that into climate risks, but also climate opportunities. And there are opportunities that can be seen for some businesses with new business lines and services, for example. And fundamentally, it can then translate those into financial impacts, which a lot of people understand that realm. And I guess fundamentally, yeah, a lot of people have been talking about climate change for quite a long time in different shapes and forms, for example, flooding risk, but it just gives a different language. And fundamentally, the climate reporting is just an evolution of the financial reporting space. So the qualities that we look for are exactly the same as some of the financial reporting qualities of data that we look for. What we need to be reporting on is that when we're producing a climate report, is that the data that we report on needs to be relevant, and relevant to the organisation specifically. And that brings up the topic of materiality. And materiality is something you'll hear quite a lot about in the space, and we will touch upon a little bit today, but more in depth in our webinars 2 and 3. So the data needs to be relevant, and also needs to be made with faithful representation, meaning it is complete, it's accurate, and it's neutral, because the directors are legally bound by what's in that report. in order to make that, there are some underlying qualitative enhancements. So the data within it and what is reported on needs to be comparable, verifiable, submitted in a timely fashion and understandable. And to break that down a little bit further, I will pass back to you, Abby.
Great, thank you, Soph. So then diving into an overview of the ASRS in particular. So this recaps a little bit of what Sophie was just talking through, the fact that the Australian Accounting Standards Board has developed the Australian Sustainability Reporting Standards, and they're all based predominantly on the ASRS IFRS standards. They have just been made to fit, the Australian regulatory and legal environment here. So there are a few minor differences between the ASRS versus the IFRS standards, but really it's almost sort of a Control F situation. So in Australia, the AASB S2 general requirements for disclosure of sustainability related information is voluntary, and it's just the AASB S2 climate related disclosures that are mandatory, and that's really what we're focusing on in these webinars and throughout the campaign. If you haven't already done so, I do encourage you to head on over to the AASB website and actually just read through, even if it's a quick scan of the actual standards. They're really easy to read. I think they're pretty easy to follow, either in a downloadable PDF version or on the online interactive version. And yeah, quite easy to navigate and see how the different sections link to one another. So really encourage you to get familiar with the standards if they are going to apply to you. And whether or not they apply to you will be mostly based on this criteria here. So from the 1st of January, the standards have been starting to roll out for the largest groups captured in the legislation. So the first group is the largest of the ASX listed companies in the country. And then being grandfathered in from there onwards, it's next year, Group 2 would commence, and then the following year, Group 3 will commence. And you need to meet at least 2 of these criteria to be captured in one of these groups. So estimated 500 businesses in Group 1, an estimated 500 businesses in Group 2, and an estimated 5,000 businesses in Group 3. And that's just the people that are going to legally need to report against the standard, not to mention all of the suppliers that would be somewhat affected as well, depending on how material their contributions are to the reporting entities in these scopes. So a lot of financial institutions would be included in Group 2. Some of the feedback that we've had, some people say, is that Group 2 is a bit of an odd group in terms of who it captures, but it does capture a lot of those financial institutions, super funds and the like there. And yeah, Group 3 is going to capture just a really significant, huge volume of people. I think this sort of timeline view perhaps is maybe a little bit easier to understand the actual rollout. So the climate disclosures are all done on an annual basis, and that has to be in line with your annual financial reporting cycle. So if you're reporting on a calendar year, that's when this 2025 calendar year is the first year for Group 1, and for those reporting on a 1 July to 30 June cycle, Group 1 starts from 1 July this year. So that means that the first reports will be due to be lodged next year, and then it flows from there onwards, as you can see, according to this graph. So basically by 2028, all 3 groups will be reporting under the ASRS. So what needs to be disclosed? So I've touched on this briefly, but just to cover this in a little more detail, and we will dive deeper into these 4 requirements in the subsequent webinars. So we don't have time to dive really deep into all aspects of this today. But just quickly, governance around how the climate-related risks and opportunities are managed, who's overseeing the process, how are all the roles and responsibilities structured within your organisation. That is really what is meant by the governance systems. Typically, that's, you know, looking at what the board's role is versus the audit and risk committee versus the C-suite versus the other operational teams, finance teams, sustainability, procurement teams. It involves a huge number of stakeholders, as we'll chat about a bit later on. But having really robust governance frameworks in place is really just the anchor point to being able to meet these standards with ease, and ensuring that everyone's got the right information and skills in order to be able to understand the disclosures. Strategy is looking at the actual and potential impacts of risks and opportunities on the business strategy and financial planning. So this is both looking at an organisation's actual sort of climate transition planning, but also how climate impacts on their business strategy and business planning. So this is where the climate scenario analysis comes into play, that it's also that sort of overlaps between the risk management section as well. And the risk management is really looking at, okay, what is the processes to identify, assess and manage those risks? So making sure that that is really clear and in line with what the standard is asking for. And then the metrics and targets is really how the organisation is measuring all of those quantifiable impacts, particularly scope 1, 2 and 3 emissions, but there are also financial metrics that need to be disclosed in that section as well. And I think it's just important to communicate on here that it's not just all about your emissions data. That's actually really just one small sort of component of the overall report. Not to say that's the metrics and targets section is obviously a huge amount of ongoing work year on year to be capturing, analysing and then reporting on that data. But actually, it's a pretty small part of the report. And also, I think something to mention here is that you don't need to necessarily reinvent the wheel every year. Like in the first year, once you get these systems and processes down packed and you get a really solid framework in place, it's about updating that each year, reviewing it, making sure it's still fit for purpose. The scenario analysis, you need to, again, revisit that, make sure it's still accurate and fit for purpose, but you don't, you know, sometimes the hardest part is actually just setting the methodology of how you even tackle that, like what you set as your boundaries or your sort of criteria for doing that scenario analysis. So I think key thing is that, yeah, the first year is the most amount of work, particularly if you've never done this before. It's going to be a huge lift for a lot of organisations. But once you do have that good rhythm in place and you've done that good groundwork, you'll be setting yourself up for success. Impacts on smaller businesses. So as we don't have time today to sort of unpack what scope 1, scope 2 and scope 3 emissions are, but in the metrics and targets section, an organisation does need to disclose all 3 scopes. As you might be aware, a supplier's scope 1 and 2 emissions are the scope 3 emissions of a reporting entity, for example. So if you're a significant supplier to a large business that needs to report under the ASRS, there's a high chance that in due course you may be asked for your emissions data to be able to feed into their reporting, into their inventory. We certainly know that I think we're quite a while away off being able to do that in a really good, thorough, robust way. So I highly doubt if you're not sort of a tier 1 or tier 2 supplier to some of those reporting organisations, there might be some time before you're actually asked to feed that data into them. However, you still need to start obviously understanding it, getting a grasp on your scope 1 and 2 emissions and understanding what may be asked of you in future. And even if you're not one of those tier 1 or tier 2 suppliers that need to feed the data in, I'm sure there's a high chance that you're already being asked for emissions data in other forums, such as trying to win new tenders or projects or clients, and needing to demonstrate that you've got the right sort of systems and processes in place anyway. So it is going to have that ripple effect. And I would hope that sort of in 5 years' time, we've actually got a lot of data sharing systems happening back and forth that are really well refined. So how to prepare? That really depends on whether you're required to report now or in the next 3 years versus not yet being required to report. So if you're not yet required to report, obviously there's a chance that if your business grows that it will eventually be captured in Group 3 of the legislation. So making sure you're across the basics is really important. So starting to track your emissions, examining your impacts, staying up to speed with the regulations, and then deciding how you want to start integrating climate resilience within your business model. So climate change is affecting all businesses, whether you're small or large. And so, yeah, trying to be on the front foot and be proactive with that is critical. And if you are in groups 1 to 3, ideally, if you're in group 1, you would be well on your way to preparing for your first disclosures next year. But the first step would be understanding your current gaps. Second step is, giving your organisation time to upskill, particularly everyone on the board and the audit and risk committee and the senior leadership teams. They're the ones that need to be asking the questions. They're the ones who are ultimately putting their recommendation to the board and then signing off on these. So they need to have the confidence that their disclosures are meeting the requirements of the standard and that a faithful representation of the organisation's impacts and the identified risks. So yeah, huge amount of upskilling that's going to be required. Everyone's going to need to resource appropriately if it is all left to the last minute and you do try and sprint to get there. It will be a very stressful time for your team. So yeah, very, very much try and avoid that at all costs. And then consider the support systems that you will need. So it's not necessarily that you need to have a consultant to do everything for you. That's, we have done different scenarios with different clients where we do a lot of the heavy lifting versus where we act as more of the coach and the guide, or where we do one specific element such as the scenario modelling. So you need to map out and figure out what approach looks right for your business. And there's support systems and tools out there. So there's great software that you can use. There's scenario modelling tools as well. And then there's obviously specialist consultants like us and others that are there to help out as needed. And then begin creating a roadmap and a gap analysis. So there's a huge amount involved in these disclosures, so it's going to be critical to make sure that you have a very clear plan of what you're doing when and who's responsible for each step in the process. You will need to manage those work streams concurrently, as we'll touch on a bit later in this session too. Common questions and challenges. There's heaps. It's really interesting to see in each context the specific scenarios and nuances that are popping up in some of the questions that we're seeing. But some of the more general ones that we think could be more applicable to everyone across the board is really understanding what data points and disclosure requirements are optional versus mandatory. So for some of the wording in the standard, there's things that such as having a transition plan in place or setting targets. It's not mandatory for you to do those things, but if you are doing them, then you do need to talk about them in the disclosures. So I think going through, and we've got in webinar 2 a bit of a recommended structure for how you can actually go through the standard and start to categorize things as what is optional versus mandatory, something that you should do versus must or may do, so that you can get really clear on mapping that to your draft disclosures as you prepare. And then how can companies limit the disclosures to be strictly compliance-based? I think that links with the second question here too, around how to balance compliance with climate ambition and ensure that you aren't, disclosing commercially sensitive information. I think these two questions are really challenging for a lot of organisations that have been doing this work for a long time voluntarily. Now that it is there's a lot of legal risk associated with it. It's interesting just to see the flow-on effects of that. And certainly what we don't want to see is a standard like this, limiting ambition. But now everything that is communicated publicly obviously is, it's obviously been important up until this point too, but just we're seeing, I guess, lots of boards and risk committees, wanting to make sure that compliance is paramount and that any other sort of work is in secondary consideration. I guess I would encourage everyone just to really challenge that, to try and think about how you can meet the compliance obligations while also trying to push forward those improvements and the reduction strategy and the targets. And just because there's a risk of putting targets out there in the public sphere, I don't think should hold you back from trying to set those targets. Of course, so long as they're credible, science-aligned targets that are really practical and achievable to meet. So just something to navigate. And I think it's interesting, we've got a few certified B Corps joining us as guest speakers in the subsequent webinars, and I'm interested to hear from them how they're balancing it. They're being like high performance organisations when it comes to climate disclosures and targets versus now needing to meet mandatory reporting. It's an interesting sort of shift in the whole approach. What support systems and tools should I be using to help? So I think we've sort of already touched on that, but there are tools out there that you can draw on, and it's really exciting actually to see some of the tools that exist these days. So definitely do your research and figure out what's best for you. Common challenges is addressing all disclosure requirements succinctly and navigating the overlap between some of the different areas. So certainly I think trying to make sure that the disclosures don't end up like War and Peace, like a big long novel. And I think the way that you would avoid that is to make sure you've got your materiality threshold set really clearly, so that you're very clear on exactly what is material information to sit in the report versus what might make sense as more of that governance background document that is still in place but sits outside the report. And it takes time as well to have those sort of internal debates and draft revisions. So if you're leaving it all to the last minute and you don't have time to actually refine what is sitting in there, then would encourage you to prepare early to avoid that. And that links, I think, already spoken about materiality thresholds. And as I said, we will touch on that more in webinar number 3. So if you've got questions you'd like to address about materiality, we can chat about that in webinar 3. And getting comfortable with uncertainties and assumptions. There's a lot of difficulty in getting emissions data completely accurate when it comes to scope 3 emissions. There's lots of often gaps and assumptions that need to be made based on reasonable information. So that is, I think, a new area for a lot of particularly finance teams that have been doing financial reporting for some time, and it's going to require organisations to get comfortable that the volume of work and the process and methodology that has been followed is sufficient to be able to comfortably sign off on the disclosures at the end of the day. So that will take some getting used to. Very quickly, before we move on, just wanted to point out that in some of the resources being developed alongside the campaign, we've got things like this readiness checklist, which is basically a step-by-step, guide of essentially what we would recommend as, what you need to be doing to get yourself well prepared, and splitting up that between groups 1 and 3 versus SMEs or suppliers to those reporting entities. So this just shows that, not everything suppliers and SMEs that aren't captured under the legislation won't need to necessarily tick off all of these steps, such as I've got steps 5, 6, and 8 here are probably a bit less relevant for the suppliers, but it's just supposed to, I suppose, give a little bit more prescriptive clarity on what needs to happen between now and when you go about lodging your first disclosures. So with that, I will hand over to Soph again, who's going to talk through upskilling, project management and resourcing.
Perfect. Thanks, Abby. Yep, I'll just be walking you through, I guess, upskilling project management. It really does affect pretty much every single person in the business. So here are some examples of the responsibilities and capabilities that different stakeholders will need to have in relation to overseeing reporting processes. The board there and the executive are really fundamental that they get training on climate governance and very much so on their legal obligations under the AASB S2 and how they interpret kind of sustainability disclosures. Along the top there, our board committees and also the senior C-suite really need to understand what's happening and put forward key recommendations to the board, and then oversee some kind of QA of how all of these responsibilities get rolled out across the organisation. It's your finance teams and the sustainability teams are just so crucial in this process. So it's really fundamental that they get really good training. So finance, for example, they need to have some capacity building on climate risk assessments and about climate reporting standards, about scenario analyses. Same with sustainability team. They need to kind of have more advanced training in financial concepts, in financial reporting, and really how that they can tie a link between both of them to make sure that they're really talking and humming nicely alongside each other. But also it goes out to all employees as well. I think all employees need to understand that it's, that there's data collection is coming from lots of different points across the organisation, and that hopefully they can start to foster a real culture of sustainability. So all of these will have to get upskilled. So they won't just need to be upskilled, but also probably have an impact on resourcing, probably might even mean that more resources are required in each area. But just diagrammatically there, we've just tried to outline the board will need to be at least, everyone will need to be across it, but at least one member of the board will need to take a real kind of skilled approach on climate. The board committee will have, again, all of them will need to know, but with one member at least upskilled on climate. The C-suite, at least be 2 to 3 members of the C-suite team, and going down into the finance teams, at least 3 to 4 of those, and potentially the sustainability teams, at least a kind of 2 to 3 across those, and employees across the organisation. So yeah, enhanced capability across all of those teams will help understand climate literacy. And good disclosure. And that leads me to the next slide, which is really about project management. And what does best practice project management look like? And really, best practice project management is all about just slow, steady chipping away throughout the year. It really, those timeframes at the end there are just too short. So typically kind of the reporting period is about 3 months. Again, that's decided by ASIC. To understand exactly when you need to submit your report, but this is just a typical example. But you can see there's lots of work streams that need to be done throughout the year, and they should be putting in different milestones. So I think, yeah, our kind of key recommendation there is that I'd hopefully have at least 1 practice run, if not 2, to really get those project management bits along the top there, really kind of nutted out, which is all about making sure that you've got a really good report structure, really good reporting mechanisms in place, and a good framework to compile the disclosure. So actually with that, that actually brings to kind of a close the content. So we do want to hear a little bit more from you. So there is another chance for you to give us a little bit of information more about what you're seeking to understand. So if you can just pop back onto either menti.com or have a little bit of a scan there. We just have one final question, which, if you can see that, is, so what areas will require the most amount of work within your organisation or within your business to prepare for mandatory climate reporting? Data is going to be a huge one, I think, here.
Yeah, interesting. What's on the, data stand out, but also the report completion and lodgement. as well. Yeah, interesting. The climate risk and scenario modeling is up there too, and that certainly doesn't surprise. But then the governance piece, I think it's yeah, a big lift for all governance teams, for boards to get across. Really interesting. Great. Thank you, everyone.
Perfect, thank you. So we're just about now to go into some Q&A questions. We've got about 15 minutes to do so. Before we do just dive into that, so we've talked a little bit about webinar 2, so you can just see exactly there the agenda, which is understanding the exact data points for this work, the qualities of useful financial information, common questions and challenges, which we've kind of touched on, but we'll go into a bit further, operational and mandatory disclosures, and we will hear from our amazing speakers from Bank Australia, Climate Zero, and the YMCA. So please do, yeah, jump on that Humanitics now. So I do have a few questions. Abby, I hope it's okay to start firing them at you.
I might just leave this screen up while you do that too, just in case people need to scan that QR code to register for next week.
Perfect. But Abby, in the meantime, I'm going to start firing them at you, and please do, yeah, feel free to keep adding to your questions, just in the Q&A box. But Abby, the first one for you is Australian entities with offices and operations in New Zealand. Do they need to consider New Zealand data for reporting? So I guess a little bit about the international context and what people need to be reporting on.
Yes, if the New Zealand operations sit within their emissions boundary, and that that would all be based on the organisational structure and the methodology. So whether they followed that operational or financial control approach, but for all intents and purposes, the answer would be yes. And it will be common for organisations to be needing to report potentially in multiple jurisdictions. For example, if they're an EU company, but they meet the threshold of the ASRS reporting requirements here for a subsidiary based in Australia, then they would also need to report in Australia. And I think that will be quite interesting because a lot of those organisations might have like a group level governance framework in place, and they'll be needing to make sure that that's clear for all of those other subsidiaries within the entity structure to be able to report on that in the same way. So yes, it just all depends on organisations meeting those thresholds, so those 2 of those 3 criteria that we had up on the screen earlier. But yes, overseas emissions data is generally included within an Australian company's emissions boundary.
Thank you. Another one here for you. Supply chain and supplier engagement is a substantial multi-year program of work. What are the top 3 recommendations for ensuring credible first pass S3 Cat 1 data?
Yeah, this one's really, really challenging, certainly. You've obviously got the survey fatigue going out to those suppliers on other topics like modern slavery and other topics as well. Realistically, sometimes the time frame is just too tight to be able to leave that all till you sort of can't start doing that in July. It's too late, so you need to start doing that earlier in the reporting period. From an assurance perspective, there's we'll chat about assurance more next week, but different auditors will have different processes that they follow, but generally speaking, it would be sufficient to rely on an industry average spend-based emission factor for those Category 1 professional goods and services emissions within your Scope 3 boundary. Obviously, you don't want to be doing that long-term for all of those emissions, because there's no way then to achieve reductions, and those emission factors are generally really conservative. ones anyway. So you might be overestimating your scope 3 footprint there. So I think the advice would be to try and do the initial assessment based on industry average emission factors. Typically the ones that you're spending the most money with will often be the ones that are also the most emissions intensive, but not always. Sometimes that can vary based on the emissions intensity of each sort of industry. But then once you know who your top emitters are, then you can start to do more of that targeted outreach and really just hone in on those, top sort of 10% of your suppliers there. And then have a clear process as to when you go out and try and get that actual data from them. And to be really clear and prescriptive in what format you need that data received back. Otherwise, you can get that in quite varied formats. So often, sending a Excel form for them to fill in can be a good way of doing it. But we'll chat about more in detail next week on that one as well.
Thank you. I've got a couple of questions with a council approach to them. So just confirming which groups caught by the ASRS, with most councils have a revenue greater than $50 million and assets much greater than 25 million. Are they at least group 3? And there's a question there with whether New South Wales councils are required to report.
That's a good question. Councils, you'd need to double check. Obviously, the New South Wales government have their own emissions reporting requirements in place. So New South Wales government entities would need to meet those requirements as well. But local councils, in terms of meeting the ASRS, would need to double check that they meet the requirements of they would have to be set up as corporate government entities. So there are some corporate government entities that would need to report. So you just have to triple check that, local councils do meet that too. And having greater revenue than 50 million, assets much greater than 25 million, at least group 3. We have not done a full sweep or gap analysis on local councils specifically, so I probably won't hand on my heart tell you which group you'll be in. You'll need to double check.
No, we've got Sally that's helped us. It's not technically a corporation, but they are so not covered, but covered by government rules, but coming is so thanks for that. I've got one question here about the credentials and certification to do with training that sustainability managers can gain in order to undertake ASRS reporting.
That one was, say that again, that was just regarding training. Can you read the question again? Sorry, Sue.
Sorry, any credentials or certifications that sustainability managers can gain?
I think, sustainability managers are going to need to upskill on financial risk and financial reporting. So certainly risk, I would recommend the GARP, they've got a great podcast and that they have a lot of risk training and information that you can draw on. So if you're a sustainability person who's not necessarily a finance or a risk expert, I would recommend upskilling in that area. And then on the finance side, it would be the opposite, right? It would be upskilling on climate science and scenario modeling. So both of those people working together. And I think that's why we've got Owen chatting next week, and he's come from a finance background and is now also doing sustainability. So that's sort of the perfect example of, how to upskill internally and reallocate sort of staff in different areas. And so there's no specific credentials or certifications necessarily that are required, but I would look at seeing what's out there.
Perfect. Just quickly, a couple more, probably I'll squeeze in. Probably just a comment that absolutely right, but there's a question there. Can we see examples of what a financial disclosure report will look like? And yes, that's absolutely something that we'll go through as part of our next session, is really breaking down what needs to go into them and what they will look like. So hopefully that answers that there. And somebody's asked as well, we can put a link to the upskilling tools that we're talking about. So yes, we'll send out a link that we're reporting to help people upskill in this area. One more, slightly more technical question, which is how will gas extraction companies report on fugitive emissions and who will check for accuracy?
It's a good question. And most likely an organisation of that nature would also be required to report under NGES. I mean, there's lots of different ways that you can go about estimating or directly trying to capture fugitive emissions data. So in terms of who is checking for accuracy, that is the auditor, that is the organisation that is performing the assurance. So the record keeping, the methodology that would be used in that scenario would need to be extremely clear and replicable for the auditor to be able to basically test and run a model on themselves to replicate. But yeah, there's lots of expert guidance and resources out there that can prescribe what that calculation would need to look like. But yeah, I think it's probably a little bit difficult to say too much more about that without knowing more details.
Great. Thanks, Abby. I think we have answered most of those, unless there's one there that you wanted to answer.
Yeah, just having a quick look through.
We can also answer these questions after the session as well by email, maybe, if we've missed anything.
Yeah, that's a good point. And we will be including a lot of these questions as well into the FAQ document that we're compiling alongside the campaign. So all of these questions we'll try and make sure that we address them at some stage throughout the campaign. Great. I think, there's one last one there from someone in terms of how we deal with suppliers that are not sophisticated with their data and cannot provide data. And you will get a lot of that. You will get a lot of pushback. You'll get a lot of cynicism when you're doing that outreach, and there's no specific rules around the fact that you have to have actual data from suppliers as part of that Scope 3 footprint. It is just strongly encouraged. It's the most accurate, credible, high quality source of data that you can use, and it's the main way that you'll be able to track and achieve reductions if you're not relying on the industry average data. But we've had clients that do outreach and they might only get 10 or 20% sort of responses from the outreach that they've done. That's still acceptable and normal to see, and you shouldn't need to stress too much that you're not getting the response rates that you want. Hopefully that will come over time. So with that, might wrap up. Hopefully that helps to provide an introduction to the topic, but as we've touched on, we will be diving into a lot more detail in the next 2 webinars, so please do come along. We'd love to see you there. Hand back to Ivan.
Great, thanks, Abby. I could just end on the last feedback slide, please. So thanks to everyone for joining today, and thanks for Rewild Agency as well. It's been a great session, really informative and interesting. So before we log off today, it'd be great if you can complete this feedback survey to let us know how we did and what you'd like to see covered in the next session. So yeah, thanks everyone, and have a great afternoon, and see you online next week for webinar 2.
Thanks everyone.